Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISL in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this, let's move on to the main part of the podcast by analyzing Nifty's daily chart. It is very important to analyze Nifty's daily chart because it gives a overview of the market, how the market is placed at the current moment, and also it gives a view on the market for short term as well. As you can see, Nifty has been in a very good momentum and it has peaked around about 24,400 500 levels. It has touched, making an arc, scaling a new all-time highs. But in the last 1 or 2 weeks, it has been trading in a very narrow range. There has not been a momentum which was there previously. And also volumes have also been dried up completely, except for 1 or 2 sessions which are above average. Most of the sessions have seen lower volumes. That is not a good sign. We would like to see higher volumes whenever the one Nifty or any index or any stock scaling new highs. We whenever the market is trading at new all-time highs, it is also important to track weakness in the market as well. We never know when the market is going to top out, and distribution days help us to track weakness in the market. Whenever Nifty declines 0.2% or more on volume higher than the previous session, we consider that as a distribution day. That signifies that there is some kind of selling coming into the markets. And whenever there is accumulation of distribution days, we consider that as a major sign and we change the market status to downtrend under pressure and from there to downtrend. Currently, distribution day count is just one and there is no major sign of concern. But if that count increases to 4 or 5 and if Nifty breaches its 21 DMA followed by 50 DMA, then we will be under slightly under pressure and we will change the market status to under pressure. June quarter earnings have started to come out from especially from the IT companies. TCS has started to announce their results. TCS has come up with good set of results. The estimates have been taken care and results have come little above estimates. Revenue for the quarter has increased 2.2% sequentially to 62,000 crores of rupees. Profit on the other side was down 3.2% sequentially to 12,000 crores of rupees. On the margin front, there was a contraction of 130 basis points to 24.7%. Even though the PAT and margins have contracted or declined, still the estimates have been beaten and results have come above estimates. GTPL Hathway has also come up with their results. The PAT has seen a sharp decline of 73% to 14 crores of rupees. Revenue on the other side has seen a growth of almost 9% to 843 crores of rupees. Margin front, there was seen a contraction of 200 basis points to 13.4%. Oriental Rail has come up as that is Orietal Foundry's arm, that is Oriental Rail, has received an order of worth 432 crores of rupees for manufacturing and supply of wagons to the Indian Railways. Anandh Rathi's results have come out good. You can see here the revenue has seen a growth of 36% almost to 237 crores of rupees. Profit has also grown almost 38% to 73 crores of rupees. Margin has seen a small contraction of 60 basis point to 41.3%. Yesterday, if you look at institutional buying or selling, FIs have been net sellers. They have sold 100,000 1100 crores of rupees of Indian equities, whereas the domestic institutional investors have given good support for the market. They have bought more than 600 crores of shares in the Indian market. For the month of June, US core CPI has come out and it has risen 3.3% year-on-year basis versus an estimate of 3.4%. In the today's session, we are looking at companies such as HCL Tech, IREDA, Oriental Hotel, 5 Paisa, and others among which will be reporting their results in the today's session. For the global market update, US market has, you can see S&P and Nasdaq closed in the negative territory, whereas Dow Jones closed flat. Asia markets are also trading with negative cues. Nikkei and Kospi are trading with a deep decline of more than 1%, whereas Shanghai is trading with a minimal decline of 0.2%. GIFT Nifty is indicating a muted opening, but the global cues are on the negative side. So we might see selling coming into the markets like yesterday's session where Nifty opened on the positive, but it closed in the negative territory. For today's pre-bell, we are going to look at Max Financial Services chart. Even though the ratings are not good, we are not advising here to buy this stock at this moment. Just we try to analyze the stock from the owner's perspective. Currently, it is trading in the ideal buy range, which is highlighted in the blue color here. It is 3% from the pivot. So 0 to 5% is ideal buy range according to our methodology. The breakout on the day of breakout, the volume has also been very good. That is the day before yesterday. Yesterday's session, the volume has been lower, but it closed in the negative territory, which is not a good sign. Ratings, if you look at both fundamental and technical ratings are not looking good. EPS is poor at 28. This is majorly because for the last 3 to 4 quarters, the company has reported negative declining numbers. Price trend is also very low at 35. This is because stocks underperformance for the last um, from the last December or November, it has been trading in the range of 1,000. It is not able to break out from that range. So that is the major reason for the RS strength being lower. Apart from these ratings, but currently it is coming into the near the pivot, and the June quarter numbers come out good. The EPS will definitely improve and price strength will also improve. But we are not advising to buy at this moment. But we would say it's better to hold better to wait on stocks like these in the current market scenario. In the current market scenario, we are emphasizing that there will be lots of breakouts happening in the market because Nifty and broader market indices are trading at new all-time highs. So you will see lots of stocks breaking out, and you will have ample opportunities to invest your capital. So don't worry about opportunities. There will be many opportunities, and better to go for the leaders rather than staying invested in the laggards. Thank you for joining today's pre-bill. Have a good trading session.